What's up, everybody? Hope you're having a great day. I know I am, and I hope you are too. Um, Portfolio should be flying today. Lots of green out there in the markets. Lots of rising higher. Very, very exciting times. So, in this first video, we're going to be talking about Google. This is going to be number one of the 17 stock gauntlet I'm about to put out. I'm going to put out this name and 16 others that I've pitched the setup for with the high five setup trading strategy that I have. I'm going to be releasing those videos throughout the day. This is going to be the first one of 16 others, like I said, where I'm just going to be giving a short, quick update on where the stock is, where the setup is, and where I see it going. So first up, we have Google. Um, since we called it out on October 27th, we are up a beautiful 7%. I was calling this out as an easy trade. No trade is ever easy, but in my mind, this was an easy trade. We had a huge run up off earnings, amazing earnings. Them and Amazon had the best earnings out of all the Mag 7 stocks, with NVIDIA still to report, obviously. We had this huge run up, and then we had this huge pullback just because of market weakness. And I was sitting here saying, we already did the hardest part. We broke out of this beautiful inverse head and shoulders pattern. Now we just came down, retested it right at our volume shelf, right at our 9 EMA line, got a bounce, got a confirmation. I put the trade out there. Like I said, October 27th, it's up 7% since. We hit our first price target at about 177. Our next price target is going to be about 183 to 185. And our third and final price target for this trade, I think it'll go a lot higher on the investing side of things. But for this trade, our final price target is going to be 193 ish. So we still have the high five setup. Obviously, we are coming out and haven't hit our measured move up to 193 off the inverse head and shoulders on the weekly chart. We have a measured time frame of about February 2025, so it should get there pretty fast. And it makes sense because this name's been a laggard to the Mag 7. We have our volume shelf that we already filled this gap right here where it's saying 2. This is number 2 of the high five setup strategy. And now we're at another volume shelf here with another volume gap up to that 183 to 185 I was talking about, and then another volume gap up here to this 193 area. So it'll come pretty quickly, I think, up until February, but it's not going to be a straight line, obviously, like no stock is typically. So let's move into the other areas of our setup with the high five setup strategy that I always pitch to you guys. We have a bullish cross MACD through our signal line on the MACD. We have higher lows and an uptrend, not just on the MACD but also on the RSI, breaking out of this daily symmetrical triangle on the RSI. I could show you on the daily chart where that is. And then we also have we're moving through the sweet spot on our trend, which is our stochastic. We're moving through the sweet spot nicely, making it a high five setup. Some additional key indicators and things I like to point out for this trade. We have come up, come back down. We've made our support line on our Williams R at about negative 31.31. So essentially, now what we can do is kind of move out throughout this box, basically like a crazy person in a room, just move throughout that box. And as long as we don't break down under this 31.31, we are good to go. Again, there's a weekly chart, so if we get a big spike down on Monday, you have to take that as what it is. It's just like a daily candle. You don't want to make any rash decisions on a trade or getting out on a weekly candle or weekly Williams R here until we get that confirmation more and more throughout the week. And like I always say, if you get 2 or more of these indicators going against you, it's time to exit the trade. But again, you need to wait at least until Wednesday or Thursday through into the week, because you could have a red first half and then a green second half to where it wouldn't have actually broke down from this support line, if that makes sense. If we go over to the daily, huge run up, huge pullback, just creating support. Like I said, filling this volume gap. We still have this price gap over here that we need to fill up to about 183, which is where I was saying on the volume gap as well. You have that price gap. And then, like I said, I think we'll get back to all-time highs up here on Google, and they will stop lagging behind. On the shorter term trend, we are also having a turn upwards, which is very bullish as well. This is the daily trend over the weekly trend, and this one moves a lot more seamlessly and quicker throughout the day. This should only be looked at for very short term moves, which I think this can come up here and this could stay like this for the next couple of days, weeks, or a month. This should be looked at. So you see, like back here, we had this bottom down here at September 9th, and then we had the run up to September 20th. So about 2-3 weeks with this move up here. So this should be looked at on a shorter time frame, like I said, but we could move up here and continue higher and then hang out and then have a small pullback, come back down here, and so on and so forth. So just so you guys understand what this trend is and how it's different than the weekly. Last thing I wanted to point out here is going to be my valuation analyzer. Google is a 5 of 6 setup. It's a beautiful, like I said, it's a laggard. Them and Amazon, I think, are like your two best deals right now in the market, even after these run ups. You have a free cash flow yield and a forward free cash flow yield above 3%. You have a PE of 23, a forward P of 20 for Google. They have the two biggest search engines in the world, Google it, and YouTube. And they've gotten into YouTube TV, which they're disrupting and taking over cable. So the peg ratio isn't there, but I'm okay with that. They don't have explosive growth, but it's a multi trillion-dollar company, so I'm okay with that. Our discounted cash flow tells us we have a fair value or intrinsic value of $209, and we are currently getting a 15% margin of safety on that. And if we come down here and we punch in our 10-year average, we are looking at about a almost 12% CAGR over the next 10 years and a almost 14% CAGR over the next 5 years, which is absolutely phenomenal. And yeah, I think it's a buy on the technicals and the fundamentals. So first and foremost, like I said, number 1 of 17, that was Google. That's where I think they're going. I think everything's still solid. The setup's still there. We still have more room to run. And yeah, stay tuned for number 2 coming your way. It's going to be Viking Therapeutics. Thanks, guys.